Hey, it's Ryan from the Dividend Investors Club, and this is the market trend tracker for the week of February 5th, 2018. And, correction 2018 is here. I think it's safe to say that. Biggest advice, you got to stay calm and be ready. We'll get into the trends a little bit, and I did wait until, after the close today on Monday because it was clear that the market was going to open down and have an awful day. I didn't realize how bad it would get, clearly. I don't think anyone did. But I think, we saw some things, today that, I just get over to the chart here. I mean, we saw some extremely aggressive selling. Obviously, everyone's talking about it being kind of that, quantitative, algorithmic selling, which I absolutely believe. And I've been saying this for, the last 24 months. Every time we have a big sell-off or some kind of, correction, it happens very quickly these days because of just the kind of way all the ETFs work and how they're all kind of quantitative based and, it's just computers selling in and out. And so, that's certainly what seemed like what happened today. But, I think the nice thing about the market this day, if you kind of want to see the silver lining, is that it's almost like ripping the Band-Aid off very quickly. We don't have to wait a month for the market to sell off and be down 5-10%. It happened in 2 days. I mean, it was just an awful day today, and you can see we've been tracking these trends for you, and these are the charts that we've been looking at. But we busted straight through that 50-day moving average today. We're 2.5% down below it now. So it's kind of like, where do we go from here? It's possible that we get down to this 200-day. I wouldn't be overly surprised, but we may not get there. I mean, that's still another 4.5% down below the current level that kind of closed today on Monday. So I would say probably testing 2,600. Just looking at the futures immediately after the close today. It looked like we're going to open up down again on Tuesday. We'll see if we can finally get some buying power in there, and if we do, I think I think this sell-off will be over. And again, the recent history has shown us it happens very, very quickly. So I said on the the cover of this, you got to stay calm and be ready. Be ready means have your watch list of stocks you want to own. This is the time where you can pick up great stocks for tremendous prices, and you got to be willing to do it. You can't waver. Again, you don't want to buy all your position at once, but you definitely have to probably start dabbling tomorrow. We dabbled a little bit today, but I think tomorrow will be interesting to kind of see, once the kind of opening, selling takes place tomorrow, because it's clear that it's probably going to be down tomorrow morning. It's just keep your eye on that. May happen early in the morning, but keep your eye on that, because this is how you profit in a market correction. And I think it's good. I think it's something we needed. I don't think we're going to go much lower than that, because the economy is very strong right now. It's as strong as it's been in a long, long time. Corporate earnings have been fantastic. I think we still have a lot of tailwinds, but the market had just gone up too far too fast. We've talked about that parabolic move that it made and how far it was above the 50-day moving average and the 200-day moving average. It's just something that needed to happen, and it happened quick. And now we need to react, stay calm, stick to our plan, and look for bargains. And so we'll take a look at some charts here in a little bit, but this spread here, between the Treasury yield and the S&P 500 dividend yield, actually contracted a little bit, partly because, the stock sold off so much, and, actually, bond yields came down, today. So it came down a little bit, but that's one that people were saying initially on Friday kind of caused, the initial sell-off, which I don't know if I totally agree with that. I think this is all, we've known this is going to happen. We knew that there was going to be a bunch of rate hikes this year. But rate hikes, in a strong market, it isn't necessarily an awful thing, because they're obviously raising rates because the economy is strong enough to do so. And so, I don't know if that was really the reason for the sell-off. I do think it's the reason why certain sectors were selling off, and we've talked about that. Real estate, utilities, some of those higher yielding sectors. I mean, that totally explains, the sell-off in those markets and the weakness in those markets. But I mean that, I just don't see that as has been, being a reason for this sell-off. I just think sometimes markets just sell off because they get overbought, and that's kind of what happened, in my opinion. But I mean, look at this chart of the VIX. I mean, I don't know that I've ever seen a one day move in the VIX like this. I mean, it was up. Look at this thing. I mean, it was up over 100%, and people are also saying that this whole volatility move could have been driven by some of these ETFs that are built and trade these futures, on the VIX. We may never know, but it certainly smells funny that it moved that much. But again, we've been complacent for so long. I mean, you can see how long we've been. 20 is kind of the average. That's why I have that line in there. We've been below that average for so long. It's just this kind of just pent up, coiled spring just was ready to go, and that's kind of what happened. So huge move there. Again, you're going to want to look for the VIX to come down. So if it comes down tomorrow, or Wednesday, that's where you're going to kind of see kind of a bottoming process kind of happen. So definitely keep your eye on the VIX. Keep your eye on these levels up here in the S&P 500. Anywhere kind of 2,600 or below, and we'll kind of see where we go from there. But you can see the heat maps here, and again, the heat maps are, the green and red aren't necessarily positive or negative. It's just the greens are the outperformance and the reds are the underperformance. So you can see, in several of these charts here, you can obviously see almost every data point is negative. So the ones that are green just means they were less negative than the rest of the market there. But I like looking at this right here because you can see what happened today and then what's happened just over the last week, and you really see what has been down the most, and what's kind of driven this market down is obviously those cyclicals, right? The retail names, energy, healthcare and biotech, materials. So cyclicals got crushed. The sectors that have kind of been underperforming are more defensive in nature. Utilities. You can see real estate in there, telecom. MLPs, have performed okay, but those are the ones that have actually, performed, on a relative basis. We're probably more of just, again, kind of defensive in nature, but everything's down. I mean, look, the best performing sector over the last week is down almost 3%. I mean, it's just incredible. And just looking at these numbers today, you don't see this very often where. Again, the best performing sector was down 1.4%. That's a big move. These are huge daily moves here. But again, I think you saw the cyclical higher beta stuff, kind of correcting the most. And I think once we kind of move higher and stabilize, or put ourselves in a position to move higher, I think you're going to see, those cyclical sectors move again. So those are the ones you want to kind of keep your eye on, for sure. You're going to want to look at stocks in all sectors at this point, because we're getting a sell off in everything, and that's just it's just a prudent thing to do. But again, looking at the asset class performance, you don't see this too often. I mean, this is just a unbelievable kind of one day move. Where all the major indices down 4%. It's just an incredible move. And over the last week, I mean, you can see some just huge numbers here, 7-8% in these asset classes in a week. That's a major move. But, keep your eye on these. I think the big trend will just be, watching those cyclical stocks. I think those are the ones that, you're going to want to find some bargains in tomorrow if you can. But let's just, before I end this video, let's just take a quick look, page 2 of this trend tracker, where you got, these used to be all green, but you can see now you're seeing some cracks here. So almost all the sectors have traded down below the 50-day moving average. which makes sense because the S&P, broke through that today. Consumer discretionary is the only one that's still kind of in that, uptrend, if you will, with it trading above the 50-day. But the ones in the yellow, those are the ones that kind of broke down a little bit today, and those are ones that clearly you can find some bargains because all of these sectors certainly sold off. We've got a few in the red. It's been the ones that have been in the red for a while. Real estate, utilities, staples, and MLPs are now in the red. So that's just saying those are a little bit weaker. Those are kind of in definite downtrends now. Consumer staples is a little bit more on the kind of flat side, but these are ones that be cautious. With real estate and utilities, I do think there are tons of bargains there. We're gonna have to see where interest rates shake out. For those, I think to really bounce back. But all these yellow sectors, definitely be looking for opportunities in those because those are the ones that I think are going to bounce back quicker. And clearly we're going to be able to get some decent opportunities. So keep your eye on those, but definitely stay calm. I do think the sell-off should probably stabilize and end sometime early this week. Just be ready and take what the market gives you. But this is a great time to profit and again, I know it's hard to stay calm, but do the best you can and just kind of look at it from a glass half full standpoint that these are going to be great prices that we can add to our positions and maybe open some new positions. So take care, everyone. Again, stay calm, and we'll see what the market gives us. I think we all know that the stock market can be a scary place, especially if you're trying to go at it alone, but you don't have to do it. You don't have to be there alone. At the Dividend Investors Club, it's community investors. We're working together to grow and preserve our wealth. So if you like this video, please check us out at dividendinvestorsclub.com. Consider joining the club and joining us, and definitely subscribe to our YouTube channel by clicking the subscribe button below this video. Take care.